Greetings, members one and all of the Salivation Nation. Does silver's rise this year validate silver bugs' enthusiasm? Let's explore! Yes, this is an article from Bloomberg through Yahoo Finance that talks about that very subject. And we're going to answer that question and with both positive and negative viewpoints, try to take a look at this from a balanced point of view. There is some good news for silver bugs, but also, I think, some concepts and things that should keep us in check as to how we view silver. This chart, though, really says it all. Let's break it down with this article and some commentary in between. Ned Naylor Leland has been all in on silver for 18 years, earning derision along the way from fellow investors favoring the more glamorous gold. Now with silver price skyrocketing 51% this year, he's got a reason to feel vindicated. Well, maybe to a point. I have never heard of this gentleman, but nonetheless, you've heard me talk about how the gold to silver ratio is really the measure of the performance of one metal compared to the other. And so far, gold bugs certainly have a reason to feel vindicated and validated. The manager of the $1 billion Marion Gold and Silver Fund in London proudly calls himself a silver bug, a term describing an investor whose fervor for the precious metal is more extreme than the typical bullion enthusiast. And I would caution against that enthusiasm for a particular metal or anything in general that you put your money into. And as an investor especially. But nonetheless, I don't see silver as an investment. And so maybe that's why my viewpoint is a little bit different than the typical, quote, investor. And maybe that's what a silver bug is. They're an investor. The bugs foresee a crash of the fiat cash system in the aftermarket of unprecedented monetary stimulus, putting silver back in play as a viable currency. Now, that is an interesting statement because that basically they are saying that silver is going to be used as currency again. And I don't think that will ever be the case, save for a very small window of opportunity if there's going to be a total economic collapse. But nonetheless, that's a different argument. I've covered that in a series that I posted called SHTF and Silver. Their core tenet is that gold's cheaper, more volatile cousin will continue surging in value. There's another misnomer there. Because in my view, silver really doesn't increase or decrease in value. I've actually posted a video about that as well too, quite some time ago. Same thing with gold. In reality, they maintain their value. It's the dollar that changes value. Especially when you look at it through the lens of history, and the history of the dollar is a very, very small, minute section of time compared to how long gold and silver have been used as money. I've been waiting since 2002 for the inevitable demise of this monetary system, Naylor Leland said. I've been standing there waving on top of a hill for the last 20 years, and suddenly everyone's pointing at me saying, that man's a genius. Well, that's interesting. He is a manager of the Gold and Silver Fund, a $1 billion gold and silver fund in London. So obviously he's doing some things right there. But on the other hand, I certainly am not one of those waving, even now, even with the performance of gold and silver. And certainly I'm no genius, but I do know that being realistic about both metals is a much safer bet in play because you're not going to be disappointed and you're not going to be pointed at for leading people astray. And I think that is the thing. I think the best sales pitch you can give for gold and silver is the metals themselves. And I believe that talking about the performance of the metals in good and negative ways, especially when it's the truth, is a far better way to get people interested in the metals. There have been plenty of forebears. The Coinage Act of 1873 demonetized the metal in the United States, sparking backlash against the government and allegations of corruption from the Silverites. The most notorious speculators were the Hunt brothers, three sons of a Texas oil billionaire whose fear of inflation and belief in the metal as a store of wealth prompted them to try and corner the global market in 1980. And actually, we don't hear much about that third brother. And it really is one brother that did it more than the others. And some people say that this whole idea of what the Hunt brothers did was kind of blown out of proportion. They stockpiled more than 200 million ounces, driving the price to $49.45 before it crashed below $11. Very unusual time, and as you see from this chart, it only got up to that level point for one period in history. We'll look at that chart again here later on. Now the bugs are having another moment. The metal has had an outstanding year when its gain almost doubled gold's. The rise has come off the back of a weakening dollar, plunging real rates, and geopolitical tensions, all of which give investors motivation to seek haven in precious metals. Now, they're not telling you where that doubling has come from. And doubling has come from the paper markets. In other words, the ETFs. And as you may remember, we covered here in this channel very intimately, silver crashed below $12 an ounce in 2020. Now look above here in 1980, driving the price from $49.45 before it crashed below $11. That was in 1980 and 81 or what have you. Here we are in 2020, and the price in the paper markets went down below $12. In other words, $11 and some odd cents. Now, that price reflection was not reflected in the physical markets because people saw a buying opportunity, so they bought it up, which means premiums were rising and the supply chains were cut short. So the physical market was separated from this ETF market. But make no mistake, it is very clear that silver essentially crashed during that time to a very low level. So this performance from that standpoint sounds all well and good, but in reality, it did not bounce up that high back up when you take into account the physical markets and how short it was and how unusual that dip was. And notwithstanding the gold to silver ratio, when you compare it, gold silver is grossly underperforming, especially as we are well into a recession right now. Silver should be a lot higher than it is. The gain is nothing to most silver bugs who foresee even higher prices because they believe more people will lose faith in the value of government-issued currency. Just read their Reddit Inc. message board with 47,000 members, or the online Silver Forum with almost 12,000. That's right, the Silver Forum. We've covered that here in this community. Silver's not the animal instincts back. Silver's got its animal instincts back, says Naylor Leland. People have spotted it and they're interested in it. Now there is a glimmer of truth. People are getting more interested in it, and I think that's the only reason why the gold to silver ratio is narrowing somewhat. But it should be more given where we're at compared to the past. Not everyone is on board, though. Jeffrey Christian, managing director of New York-based commodities research firm CPM Group, has heard the story before. Well, there we go. Spent a little bit of a counterpoint here. These guys have been waiting for the collapse of the global financial system for 40 to 50 years, he said. Nothing you can do can make them think they're looking at the world the wrong way. The disciples point to evidence suggesting they're right. Physical silver bar is a preferred investment vehicle for die-hard bugs currently are in short supply, with refiners struggling to keep up with the demand from dealers. The delays also can be attributed to silver being less valuable than gold, so smelting enough bars to produce a quantity worth investing in is more labor intensive. Whatever production there was took another hit when refineries shut down earlier this year because of the coronavirus pandemic. For other silver bug favorites, like coins, investors are paying far more than the spot price to get a hold of them. Gregor Gregerson, founder of Singapore-based dealer Silver Bullion Pte, said premiums for American Eagle and Maple Leaf coins currently are about double the usual due to scarcity. And again, scarcity is really the wrong word. It's supply chain problems. Retail investors' thirst for silver is also tapping into exchange-traded funds, which added more than 8,800 tons of the metal this year. In fact, we've heard about September deliveries being astronomically high because of that demand. They're particularly popular with the Robinhood Markets crowd, which prefers to invest digitally rather than by purchasing bars and coins. And Robinhood is an app that is so convenient, you just download it and install it. I've never actually worked with it or messed around with that type of thing before, but I might give it a shot. Who knows? Put a couple bucks in there, see what happens. The number of users buying into the largest silver ETF, the iShares Silver Trust, or SLV, more than doubled in the month leading to August the 13th, when the app stopped publishing the data. Wow, now that is interesting. But to the old-fashioned silver bugs, ETFs aren't worth the paper or smartphone screen they're written on. They allege the funds are backed by metal that doesn't exist and are a tool designed by banks to absorb investor demand and curb prices. Now, that is a legitimate criticism, I do believe, because I think pretty much everyone knows that not only for this market, but also for most any commodity, there are a lot more digital representations thereof than the actual physical. In this market, the only thing that counts is physical, said Gijbert Groenewegen, a co-founder of hedge fund Gold Arrow Capital Management, who quit in 2011 to run a firm investing in silver miners, physical and in your own possession. So there you go. Fascinating indeed. And when we look back up here at this chart, we're going to study this and see exactly what this is about here. When you look at where we're at with this, let me get back up here. You look at where silver was before the big spike in prices. Now, from 1975 to 1979, we had it just about under, for the most part, just under $5 an ounce, according to this chart here. And then we had the big spike, and then essentially it went back down. Now, for the most part of that time, it went back down to those previous levels. But we did talk about silver's had a little bit of a spike in about 1974 there. And I think that spike, when it came down off of that spike, that's what started this new floor. These are these new resistance levels that we see with silver, because beforehand we can see that was obviously around the $2 and $3 range after 1968, which was kind of that first little spike and that we saw there. And nonetheless, this is kind of the realization of the actual price of silver after we were taken off the silver standard, I guess, used in our currency. So we never really left the silver standard until 1965, 66. Well, technically, maybe even 69, because 1969 was the last year that the 40% halves were used in circulation. 1970, it was only in the special mint set, or the mint set, proof sets. And essentially, it was that when silver was completely removed from our monetary system and our currencies. So then you have this new floor. Here's new floor number one. Then the huge spike, and it pretty much dipped and ebbed and flowed through through about the mid 1980s. And then it essentially leveled out at around an average of $5 an ounce when you take into account. So just a little bit above the previous floor, but not much. essentially moving on up into about 2003, 2004. Then we saw the steady rise up, especially after what we had seen in the marketplace with increased debt and deficit spending and devaluation of the dollar. Well, look at there. It has spiked up and then it went way up here. Now in 2011, we saw that very small moment of time where it reached up above. This is obviously averaging out or what have you, but really it got up to about $48 an ounce again, but not adjusted for inflation. It's a little bit more. Same thing with over here. That was actually about $118, I believe, when you take adjusted for inflation. But then we saw this kind of tepid, just like here before, but on a higher scale here, the price moved back down to a new floor. And this is the age of the YouTube age, I guess. And this what sparked, I guess, this new, community here on YouTube started around 2012, really kind of on its way down. Most people were thinking it was a good buying opportunity, myself included. And we thought, well, that's going to go right back up again because of quantitative easing, and like we've never seen before. Well, it did come back down, and so usually the time that we measure it goes back to here, but really we should look at this new floor here. We've seen a new resistance level at around $15 an ounce on average over the past 6, 7, 8 years, and that may seem low. But look where it was before. That's 3 times what it was before. And what I look at for the promise of silver, for me, are these floors. Here's floor number 1, when it was basically tied to the dollar. And it was in our quarters, dimes, and quarters and dimes, and half dollars. Then we saw this floor here. There's floor number 1 of a resistance around $2.50 maybe. And then this resistance at just below $5, this resistance at right around $5. So this spike that we saw with the Hunt brothers was such an unusual anomaly. It was basically fixing it, cornering the market, however you want to interpret it. But nonetheless, it was such a strange anomaly that essentially did recover back to normalcy, so to speak. And then we have this new floor here. And at this period here, from 2004 to 2010 or so, was a very long spike buildup of silver prices. Now we have this other floor, but you see it's more volatile here, much more volatile of a floor here than it was here. And now we're on another rise up, but it's been kind of pulling back and what have you. So we'll see how it happens. Will this create a new floor? I think there's a potential that it could create a new floor for silver and a new resistance. But I think it's going to take a while. I think we need to see bigger price action before we see that. I think if the new top is not near where the old top is, I believe we'll come back to this floor somewhere around this level again, around the $15, $16, $17 mark. But we'll see how it plays out. We just don't know, but I do believe in being realistic about silver. But it is fascinating to talk about. It's fascinating to kind of see what the motivation is or what have you. And this is the guy. This is Ned Naylor, the dude, and there's an image of silver there. So post your thoughts below. Very interesting subject. I would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.